Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. Been a little bit busy recently. Know there's a lot of news going around, but I haven't been keeping up too much with the news. I know there's a lot of acquisitions going on, but I also know the economy has been struggling, and that has a lot of implications. And it's not just macroeconomics, it's microeconomics of public companies giving bad guidance. There's a lot of supply chain issues, but a lot of companies giving really bad guidance. You've seen a lot of stocks tank. A lot of the work from home stuff isn't doing as well. And also you have the Twitter acquisition by Elon Musk. There's just a lot of things going on in the market right now in the globe that have implications for the big four accounting firms. And I don't think it's hit the big four accounting firms as hard as it probably should, but we know that professional services are always hit later. But I didn't really want to talk about that stuff. I wanted to talk about more of a working environment observation and maybe observations that I've had over the next few podcasts. But one of the ones that I've recently not necessarily noticed recently, but it's come to my mind again, is that when you work in the big four accounting firms, there's certain people, partners, just people that end up with the worst clients, with bad clients. And they get the bad clients. They tend to work with not good people, and working with partners like this or senior people in the big four is not good. And you have to get to know these people in your group, and you have to stay away from them. But a lot of cases, you're going to end up on their engagements as an associate, and you have to find your way away from these people in whatever way that you can. But I just wanted to bring that up to people. I think it can save people a lot of time in their careers, wondering what's going wrong. But I think what I wanted to put together was that it's often the worst people that get the worst clients. For example, a lot of times you'll work on a client where they can't do anything right. They can't make any entry correct. They rely on you to help them make the entry, whether you're in audit, tax, whatever. You're not really supposed to be in that role, but they rely on you. When they do calculate something themselves, it's often incorrect. But also they do everything incorrectly, and then they have these deadlines. And a lot of times the deadlines aren't even 100% set. But even if there is a strong deadline, they'll even reinforce it with other internal things, like they have vacation coming up, there's a medical emergency, or there's some other kind of, there's always emergencies for these types of people too, where not only do you have a deadline, but there's a deadline before the deadline so that you can finish and not really look at anything or question anything that they're doing. And I've run across this multiple times in my career, and I think that's where my knowledge could be useful for other people, is that when you hear rumors about people, and a lot of times you have to believe these rumors, and often more times than not, because people's intuition is good, you have to believe these rumors. But not only are the people bad in their management style, in their communication style, in their leveraging people style, but they're also get the worst clients. So a lot of times you'll be blaming these people, and you might complain about them. And I would argue against that. Don't complain about people to other people, because unless you're 100% trusting of the person you're complaining to, don't complain about senior people, because it gets back to them. But you'll be complaining about them and think it's all them. But a lot of times it's not. It's a combination. It's the weakest people in the group get the weakest clients, because the other partners are trying to make the most money with the least amount of effort. And that's very evident a lot of times in the big four accounting firms. I think that's why a lot of partners get into bad situations, and that's how they end up in the headlines. But it's these really bad partners, they get bad clients where the bad things happen. And sometimes you want to be a hero, sometimes you need utilization, and that's how you end up on these things. And you have to be precise with your career. And that's why I'm encouraging people or trying to teach people about this, but also encouraging them to stay away from these people in whatever manner you have to. And a lot of times to get off of these engagements, you'll have to do something tricky, like do a rotation in another group, take some vacation at key times. Because if you take a vacation during a year end when you should be working on the client, then you won't be staffed on it. And then if you take another vacation again, then things will start working your way. But I want to encourage people to stay away from the bad people in your group, because not only are they hard to work with, if it was hard to work with on a good client, that's one thing. And I deal with that too. But that's easy because the clients are understanding and they try. On the clients where they don't try, have fake deadlines, and just push you all the time for action items, like clients like these, they're not good at anything. But when it comes to managing how quickly you work, they're very good for some reason. So I want to teach people to stay away from the bad people, because they're going to get the worst clients, and they're also going to have the worst management style. So that's one thing that people can do if they're joining the Big Four, or if they're already in and you're kind of wondering why you end up in certain situations. This could be one of the reasons. But that's some food for thought. To get more advice like this, to get more updates, make sure to subscribe to his podcast, and also check out the show notes for useful links. Thanks for listening.